And we are live. Let me know if everything's coming in clear, but I think we're looking good on my end. Welcome to the Dylan Holy Experience at 6 p.m. Pacific Standard Time in California, 9 p.m. Eastern Standard Time for those of you on the East Coast. Thank you for giving me some of your attention in your very, very long and fast-paced day. I really do appreciate it. This is your midweek market recap, and we're not going to delay any further time for the millions because y'all need some news and some entertainment, and we'll give you a little of both. Stock futures are flat after a 3-day losing streak. Stock futures were flat in overnight trading Wednesday after the market suffered 3 consecutive days of declines as the tech-powered rally faded. Futures on the Dow Jones Industrial Average rose 23 points or 0.07%. S&P 500 futures inched up by 0.05%, and NASDAQ 100 futures were little changed. The rally appeared to decelerate this week as all 3 major averages fell 3 days in a row. The S&P 500 slid 0.5% on Wednesday, marking its worst daily performance in June. The equity benchmark is now down 1% week to date, on pace to break a 5-week win streak. The tech-heavy NASDAQ composite fell 1.2%, suffering its worst daily performance since June 7th. Big winner in artificial intelligence, AMD dropped 5.7% on Wednesday, while Intel retreated 6%. The Dow Jones Industrial Average slipped 0.3%. Now, the NASDAQ 100, it's had a lot of stuff happen to it in terms of, like companies that it listed that were on the index and then got delisted. Rivian being one of them, and I guess that brings us into our first story of the day. The first major story past the indexes, of course. EV maker Rivian is going to adopt Tesla's charging standard. Electric vehicle maker Rivian said it agreed to adopt Tesla's charging standard, giving customers access to the biggest U.S. charging network and adding momentum to Tesla's bid to set the industry standard. Customers of Rivian, which has its own small network of fast chargers, will be able to access 12,000 Tesla superchargers with adapters in the United States and Canada as early as spring 2024. Rivian also said it would make a Tesla-style charging port standard on its vehicles starting in 2025. Tesla shares are up more than 40% since late May when the leading EV car maker announced its deal with Ford. And here's the thing with Tesla, all right? And this is like, whether you like Elon Musk or not, Tesla has effectively monopolized the electric vehicle business, and more specifically, the charging networks. The way that I explain this to people in terms of what's going on with Tesla's supercharger network is it's real, dude. 45,000 global superchargers, 15 minutes to recharge up to 200 miles, and it's cheaper than gasoline because all that stuff, all those coal-fired plants that power those generators at the Tesla superchargers, they're all subsidized. They get that green credit from the government. They get those green AOC Great New Deal or Green New Deal subsidies. Obviously a joke on the Green New Deal stuff. Obviously that has not been passed, but they do get pretty heavily subsidized by the U.S. government. Going on, though, how I akin this supercharger network, and it's good that there are standards in terms of the charging network, in terms of the actual port that you can charge with. I think that's a good thing. I think I think having a universal port is an overall good idea. I think how like the European Union has approached something like the USB-C, like basically ban everything else except having a USB-C charging port. I'm not really the biggest fan of that. I think the better approach is more like just how USB-C operates on computers, or having a USB network operates on computers. And what I mean by that, or actually, I guess in the case of the Tesla and charging argument, it's the case of basically all cars having the exact same like gas nozzles, so gas nozzle dimensions. Like everyone uses it. Like you can go to a gas station and like every car is gonna have a they're saying here 3¼ inch gas nozzle. So that's like the free market basically deciding, like everyone on planet Earth basically being like, yeah, this is a lot easier. And also what makes this a good way, or a good idea in terms of how people go about having universal adoption, is there's not one company that uses that this standard, this gas nozzle standard, and has the ownership of it. Like, I think the problem with the Tesla Supercharger network, and Tesla and Musk have both went on record as a company and as the person basically saying that they're willing to democratize this charging network. But right now it's all owned by one party. And I think it's good that this network exists, that there's a standard of all of these chargers with the exact same port, and you can basically expect the exact same level of service and charge at every one of these stations. I think that's a really, really good thing. But I think it's bad that it's controlled by a single company. Like, there could be a point to where it reaches, I mean, in terms of the battery powered and charging station market, like it's achieved the same level of ubiquity that like the App Store has. I mean, 1 billion people use Apple products. 3 billion people use Android, or like 2 billion people, 2.3 billion people use Android. So I think it's good that there are standards in these types of things, but it is worrisome that a single company does control basically the monopoly on the charging standard for electric vehicles. That being said, if I was a Rivian customer, I would be extremely happy right now because you've basically unlocked like the best charging network in the world for your cars. But this also does mark the end. I really do think like in a euphoric market, there are a lot of competitors that rise up for a lot of different things. And hey, you already know that I am the first one to be about competition in the marketplace. I think competition in the marketplace is the single best thing for the quality of life for people. Competition is the best thing for people. It gives them the best products. It keeps companies in line. And I think overall it increases quality of life for people. Like, that's basic commerce. I think competition is good. The thing is, though, is when you have something like the streaming wars, when you have something like the EV car wars, you have all of these different companies start popping up with all these different standards, and it's all fragmented. Like, if we take a look at like the how many streaming services are there, and then we'll just go to images. If we take a look at how many streaming services are there, look at all of these, right? There's like and this isn't even showing all the main ones. Like, if we take a look, dude, just give me like, I mean, and even not even this shows everything. But these are all the major players. Let's call it all of the major players. So what's happening now is the streaming wars are over. Like, companies are starting to consolidate. I mean, like, HBO Max has now just turned into Max. Like they've absolved like 2 of their other streaming services and folded them into Max. Paramount and Showtime, they folded into each other. I think Disney Plus, Hulu and ESPN Plus are still like all kind of split, but like they're talking about merging them together. So all of these companies that have like all of these major streaming services, they are starting to merge them. We're seeing consolidation in the marketplace. Like, the wars are over. They've stretched people too thin, and I think the same thing is happening and is going to happen with the electric vehicle industry. Like there are only and people thought that Musk was saying this in hyperbole, but Tesla and Ford are the only 2 automobile companies in America that have not gone bankrupt. And I think Tesla has a decent amount of cash on hand. I still think Tesla is overvalued. I mean, their price earnings ratio is 76. There was a point where it was at like 250, but I think that Tesla, over the next 10 years, I I think that Tesla's going to go up. I'm not personally invested into them. If they started paying a dividend, maybe Daddy would take a further look at it. But but people that hold Tesla, I think Tesla is an overall good company, and I think they're going to hit a really good economy of scale. Because that's Tesla's bread and butter. I think Tesla, over the long term, is going to get cheaper to make their vehicles. And I think that the quality is going to get better. And if the company ends up getting the neural network to drive in a self-driving mode as they expect it to and plan it to, I think it's going to be game over. I really think it's game over. But consolidation. So we have Tesla. We're going to have Ford. We're going to have General Motors. And I think like all of the smaller car companies are going to kind of fold in. I think Tesla has already struck deals with GM and Ford. I really think that Rivian gets bought out. Rivian yesterday Rivian got delisted off of the NASDAQ 100 because it's fallen so much. If you look at how the stock is down 90%. It IPO'd, hit a peak of 179. We can go back even further. Hit a peak of 179, and now it's at $14. It's Rivian is going to get bought out. If you look at its earnings or its free cash flow, they are. Where's their free cash flow? God, the net cash flow investing. Wow, this is not a good. Come on, CNBC, step it up. We need a better user interface. But they're free cash flowing negative billions of dollars. Where is it here? Come on, there we go. Negative. Let's check our financials. Boom. It's free cash flowing negative $6.5 billion. Rivian is getting bought out. It is going to get bought out. There is no other option than for Rivian to get bought out. If a company even wants it, if GM or Ford or Toyota, I don't know, the Hyundai Group, the Jeep, the Chrysler Dodge Jeep Ram, CDJR, maybe them. I don't Rivian, dude. This is a death note in terms of a company's operating ability. How much cash do they have on hand? Okay, so they have $11 billion. They can basically sustain. If you're going off of free cash flow, they can basically sustain. I would say maybe another year of losses, because the other thing too is the losses, the free cash flow, negative free cash flow is increasing. The gap is widening each year, and the amount of cash that they have is dwindling at near or faster than that pace. So doesn't look great. I am not short Rivian. Let me make that abundantly clear. I'm not invested into Rivian. I have no exposure to Rivian. I'm just calling it like I see it, baby. But I think Rivian's going to get bought out. I think Faraday Future gets bought out, and I think that we're going to see consolidation of these car companies, and I think that those resources and the human labor that they end the actual workforce that they end up getting, I think that most of those people are going to get diverted into larger scale projects, and I think they're probably going to be solid after that. But I definitely think that we're going to see consolidation in the automobile industry, specifically in the battery powered car industry and hybrid car industry. And they're just going to get bought out by major corporations. That's the game, baby. Speaking of tech and automobile, well, not automobiles, but tech, Intel stock dropped 6% as the company updates its chip manufacturing plans. Intel stock dropped 6% Wednesday after the company gave investors an update on the company's turnaround plan to become a foundry competing with Taiwan, a semiconductor manufacturing company. Intel's new reporting structure could help control costs at the chip maker, which is seeking to trim as much as $10 billion from its costs over the next 3 years. Now, I don't know about Intel. I think that it's good that they went through a massive restructuring. If we look at how the company's been doing over the last year, I think it's good that They're doing a massive restructuring. I know there was a lot of bloat at Intel. They were also a great dividend paying company. Not the biggest fan that they slashed their dividend by 66%. I don't have any exposure in Intel, but I think what's good for Intel is an increased investment into domestic semiconductor manufacturing. And like people talk about like Joe Biden's infrastructure package, but I think the best thing that the Joe Biden administration and presidency has done was actually make real investment into American infrastructure. Like, and I'm not talking about like the fucking potholes. I'm not talking about the bridges. Like, it's cool that they have them, but like nothing changes with that. But like the semiconductor stuff and bringing American semiconductor manufacturing back, and I think it set a precedent where we're going to continue to do that. Same thing. Say what you will about what's it called? But I know ConocoPhillips got the contract, that $8 billion contract that ConocoPhillips got to drill in the National Petroleum Reserve. Like I think, and obvious, the Willow project, that's right. I think that is oil good or bad? I think that like that argument, it's just played out too much. Like it's what we run on right now. And I don't think the alternatives are any better for the environment. Like we're doing rare earth materials anyway, at least like in America, like we're using like American labor, but like this is the infrastructure investment. It's like tapping into our petroleum. The infrastructure investment is like semiconductor manufacturing. And I think that's a really, really good thing. I think that's a good thing macro for Intel. I think them shaving off their expenses and really dialing it back. I think that in the short term and medium term, it frightens investors. I liked Intel. I have a pretty good friend who loves Intel stock. They've been holding it for like 20 years. They still like Intel even after all of the downsizing and the restructuring and all of the dividend cuts and everything like that. And I think that long term, it's probably going to be good for them. I'm going to sit out on Intel for the next few years, probably until we get some stability in their business model. And obviously, this could be an infamous short Dylan Holy moment. And if that's the case, if it ends up being a short Dylan Holy moment, not saying it is or it is not, but if it is a short Dylan Holy moment, then fucking long this thing, because I do think over the next 10 to 15 years, I think the Intel Corporation is going to have some more glory to its name. I'll say that. Moving on, student loans are back, baby. Student loans are back. DrivingCrooner.com, baby. Student loans are back. Their payments will restart in October. The U.S. Department of Education says student loan payments will be due starting in October. The forbearance is finished. The student loan payments are going to return. It's likely going to be a big adjustment for borrowers when the pandemic-era policy expires. Around 40 million Americans have debt from their education. The typical monthly bill is roughly $350. Student loan debt in the United States also totals nearly $1.8 trillion. And since COVID, we can just run the math right here. Student loan debt, 1.6. It's gone up by about 100 billion since COVID started. And from 2006, it has quadrupled. It has saved the average borrower likely around $15,000. But I do think that this is going to hit people really, really hard. Like most people, and I ran this story on Dylan Holy, on at Real Dylan Holy. Wow. A few days ago, like I got ahead of the news cycle on this one at realdylanholy.com. I guess we can also go ahead and follow over there. But and this is information from 2021. This is the most recent information I could find. But half of Americans have $250 or less in monthly disposable income, and the average payment's $350, roughly. That's worrisome. I think that people are already so strapped for cash that this is only going to take it to another level. Like it really is. If it like when it rains, it pours. This is going to start being the tipping point. Like you've got credit card interest rates at the highest they've ever been. You're adding back all of the monthly payments that people had to account for. You're adding all of that stuff back. It's going to get interesting. I'll say it's going to get interesting. And another part of this is, half of it, of what I've been talking about here is the forbearance ending and people having to make payments again. And I also mentioned the interest rates on credit cards being at all-time highs. Well, the Federal Reserve had some stuff to say. They directly impact the interest rates of credit cards and also mortgages and basically any other piece of financing in the United States of America. Let's see what was being said today. Federal Reserve Chairman Jerome Powell on Wednesday affirmed that more interest rate increases are likely ahead as inflation is well above where it should be. Quote, inflation pressures continue to run high, and the process of getting inflation back down to 2% has a long way to go. End quote. So, yeah. They are definitely going to... Dude, the Fed's going to strangle... The Fed already has strangled this market. Dude, the market is going to get strangled. Strangled, dude. Like, it's insane. It is insane. Let's take a look at the effective federal funds rate. Like, oh, dude, yeah, they are going to beat the shit out of any credit-based asset or liability right now. They are really about to end them. Quote, nearly all Federal Open Market Committee participants expect that it will be appropriate to raise interest rates somewhat further by the end of the year. End quote. Yeah, I mean, like the median number that they were talking about was between 5.6%, which is what all of the people at the Fed were pricing in. But they're at least indicating that we're going to see rate increases totaling 0.5 percentage points through the end of 2023. That indicates 2 additional hikes, assuming quarter point moves. They may do like 10 basis point moves, but yeah, they're about to knock some shit out. It's about to be shit's about to get cray. Shit is about to get cray. I'm thankful that the only debt that I really have is locked in. So I'm locked in at 4.99% on my Corolla. And I pay my credit cards off in full each month. So I have been relatively untouched by interest rate increases, except for like my savings accounts, which I don't have anything in savings right now. But in my savings accounts, I'm getting some more yield, which I will take that. But anyone that has like credit cards and is carrying balances right now, it's a rough time. And speaking of financing and paying payments on things, this isn't really impacted as much, except if you're financing right now. But the average auto loan for a used car has a loan to value of 125%, meaning for any used car, the amount financed is 125% the value of the car. For a used car valued at $10,000, the average financing would be $12,500. Let me break this down. Let's pull up a loan to value calculator. Loan to value calculator, if we take a wee gander here. So let's say the value of your car is $10,000. Let's say the outstanding balance on your car payment is $1,250 or $12,500. The loan to value is 125%. And if you were to break that down even further, we take that outstanding balance that you have to pay on the car and you subtract that from the principal or the value of said car, you are at, let me see here, $2,500. So you're at negative $2,500, right? Then you divide that by the balance of the debt or the outstanding balance on the financed asset. In this case, it's a car. You're underwater 20% on that car. So most people who finance vehicles right now, they are 20% underwater on their cars. That's a lot. Like, that's crazy. That's actually absurd. It's pretty crazy stuff. So I do think that we're in it for Max Payne. I mean, like, at this point, I was speaking to someone today about they got a car, and I was like, oh, what's your term on it? Because in most cases, people finance cars. This is America, maybe everything's financed. And they said, oh, I leased it, so it's actually pretty cheap. So people are now getting to the point where they have to lease cars. And I guess people have always been leasing cars, but when like the loan to value on a financed used car is 125%, it's pretty slim pickings. It does not leave much for people to purchase cars. So yeah, Maximum Pain. Moving on to Max Payne. This one isn't really like interest rate induced. This is more just like the wealth cap, which sucks. But 49.7% of Californians are renters. Basically, half of California rents. Nationwide, renter occupied housing is at 36.9%, the highest since 1970. Removing the value of a home, a homeowner's net worth is 20 times that of a renter. And we're moving ever so closely to you will own nothing and be happy. But let's take a look here. So the amount of people renting in the United States, well, from like a nominal amount has never been higher, just because like our population has also never been higher. But the percentage of people that are renting in the United States has not been this high in 53 years. Pretty absurd stuff. And there's a widening gap in terms of the net worth of a homeowner and a renter, taking out the value of a home. The average homeowner is 20 times more wealthy than that of a renter. If you include the price of a home and the value of the homeowner's home, homeowners are 40 times more wealthy than that of a renter. Pretty crazy stuff. The rich are getting richer. Like, wealth is just trickling to the top. It's just consolidating. And I think that this number is going to get worse and worse and worse. I really do think so. I think how corporatism works, the bread and butter of corporatism is it is just trickle down economics. Like, that shit does not work. Corporatism relies on the infinite increase in the equity of assets, securities, so stocks, cryptocurrencies, real estate, investments. Their wealth requires infinite growth. Infinite growth. At the behest and against that, it requires the stagnation of anyone that is not in that class of people. It really is bourgeois proletariat. Like, shout out to my homeboy Adrian, iconic socialist. But Marx was smoking on that good coleslaw when he was talking about bourgeois and proletariat stuff. I think it's like bourgeois, whatever. All fuck Borges, but I can spell proletariat. Yeah, I can spell proletariat. Boom! We're so good. Bourgeois and proletariat. Wealth is just trickling to the top for the bourgeois, and the proletariat is having more and more of their wealth extracted through the loss of purchasing power, because the top 1% keeps printing more and more money, because they're all in that same class together. Like everyone, government, politicians, like the Supreme Court justices, the top level generals, and the billionaires. Like everyone, like they are the noble ruling class, and they make all the decisions for themselves, all the while. And business owners as well. Well, not like small business. I'm talking like corporation, like CEO, stuff like that. All that fun stuff. They are making the decisions to print all of this money and give themselves more subsidies and credits. And all the while, they have suppressed the earning potential of Americans, of everyday Americans. They have stagnated the working class. By design, they have done this. And that is wrong. That is not okay. And this is the direct result of that type of stuff. This is the direct result of corporatism. Like corporatism is a very, very bad thing. I think capitalism is good. Capitalism is commerce. Corporatism is the real danger. In the same way, like, corporatism was the thing that killed the Soviet Union. Like, yeah, it was like state owned, but it was like corporations. And then through corporatism leads to authoritarianism, which is also just as bad as corporatism. Like, authoritarianism is also bad. Like, this leads us closer and closer to authoritarianism. Right here. Right here. It's really rough stuff. Moving on. Bitcoin has tapped $30,000 for the first time in over a year, since May of 2022, to be exact. It's now been trickling. I think it's basically sitting around 30,000, and we can actually take a look at the Bitcoin chart. Bada boom, bada bing, baby. Give me that super chat. Come on, give me that bread and butter. Give me that corn. Yeah, I mean, I think Bitcoin macro looks really good here. I buy it. I buy Bitcoin. I like Bitcoin. I think Bitcoin seriously looks pretty good right here. But I think Bitcoin looks good generally at any price. So I'm gonna keep dollar cost averaging. Same thing with Ethereum. I think Ethereum's probably gonna swing up, and I think the crypto market's probably gonna go up a little bit. Is it gonna come back down? Maybe. I don't know. It's gonna fluctuate. I know that. But I don't know. Like, Dow Jones looks like it may have stagnated. S&P 500 may start to go down a little bit. Again, don't trade not financial advice. Don't trade on this kind of stuff. This is just me doing like a bear look at it. But I think Bitcoin's going to have a decent uptrend. I think it may go down short term. It may rebound a little bit. But I think long term, 5 to 10 years, I think Bitcoin trends upward. And that's why I invest. I don't invest to lose money. I'll say that. But yeah, I do like Bitcoin. I like Bitcoin right here. I like Bitcoin at all-time high, 69,000. I like Bitcoin at new all-time high. I just like Bitcoin. I really, really like Bitcoin. But you know what I don't like? This is our final story of the day. United States debt hit $32 trillion today. We raised the debt ceiling from 31.4 trillion to right now it's uncapped for about 2 years. And now we're at $32 trillion in debt. And let me tell you something. That number's not going to go down. In 10 years, we're going to be at 50 trillion. And in 10 years from now, the United States says it's going to be at $50 trillion. May even be sooner than 10 years. But yeah, it's our debt burden's going up, and I think it's going to keep increasing. I think the gap is going to continue to widen until there's a breaking point. What's that breaking point going to be? I don't know. I really could not tell you. I do not know. But I know at some point there's going to be one. Because whenever something like this happens, shit breaks down. And that's not doom and gloom. That's just going off of historical precedent. Like, every time this has happened, we've seen civilizations fall. Is this one going to fall? I don't know. But I know shit's going to break down. And I know shit's going to get real interesting real fast. And with that, I think that brings an end to the midweek market recap. If you liked what you saw, feel free to head over to twitter.com/RealDylanHoley. My handle is at RealDylanHoley. I'm a G-rated hustler, host of the Dylan Holey Experience, as you're all watching right now. We give you all breaking news, content, long form. I mean, it's like short form, but like long short form content. You get the first announcements whenever I'm going live. I give y'all like a 30-minute heads up. Key takeaways every single day the market's open, the Dylan Holy Experience is open, and of course, breaking news hand parsed from your boy's hands. Half of y'all right now are already subscribed, but for the other half that are watching me, be sure to head over to youtube.com/@DylanHoly and give me a subscribe over there. We're slowly growing the members of the millions, and I like it. Brick by brick, baby. Brick by brick. We inform and entertain. That's all we can do, right? That's all we can do. And lastly, of course, twitch.tv/Dylan Holy. That's where the other half of y'all are watching. But be sure to give me a follow. We're getting real close to being able to become partnered. And then we start having fun. Then people start giving me money. We start getting donations to the channel. And we start investing back into the members of the millions. But with that, I think we're going to call it. Thank you all so much for watching. Always a pleasure doing these. And I hope y'all have a great rest of your night.